Hello friends, welcome to Vidyaruba Academy and a warm welcome to the first episode of Let's Revise session. And today's topic will be on direct taxes, the first chapter being income from salary. The idea of the video is to give you a quick revision on the significant topics which we can expect for your examination. So yes, income from salary. We know the basic condition that is required for an income from salary is that there should be an employer-employee relationship. So any question that you see in your examination, first ensure whether they are referring to an employer-employee relationship or whether the agreement is in nature of a contract or agency, etc. So this is one of the important point that we miss out to read in our question paper. Please ensure that you see the question, understand the relationship between A and B before concluding whether it is an income from salary or not. So in our first episode, we will be covering some topics which are relevant for your MCQ aspect. Any examination, whether it is direct tax or your IDT or your law paper. So any paper, the first objective is to see that you are able to get the maximum in your MCQ question. So if you are able to get 90% of your MCQs right, it will not only leave a good impression on your examiner, but it will also help to boost your pass percentage as well as the possibility of you clearing the paper successfully. So preparing any subject for the your inter examination, make sure that you are revising all the MCQs that are given behind your study material or other books that you are using for reference, etc. So first one, salary to partner. So is salary to a partner is an income from salary? No. Though the term used is salary, it is a partnership business. Okay. So henceforth, it is not exactly an employer-employee relationship there. And the such salary received by the partner will be taxed in his hands under the head business income and not under income from salary. Director sitting fees. So director sitting fees is to be taxed in the hands of the director under the head income from other sources, and it is again not a salary income. Agency commission. So agency commission, the term itself is quite clear that the relationship is that of an agent and a principal and not that of an employer and an employee. Henceforth, the agency commission is not to be taxed or to be treated as an income from salary. Instead, it will be taxed in the hands of an agent under the head business income. Pension received by a widow or any legal hire of the SSC. Pension received is to be taxed under the head income from other sources. So what is the difference? If the employee or the retired employee is receiving the pension, it will be his salary income. If the same pension is received by his widow or a legal hire, please note it is not to be treated as a salary income in the hand of the widow. Instead, it will be her income from other sources. Why so? It is salary. Pension is forming a part of salary. It is very much within the definition of salary. Then why this discrimination? Because when an employee or a retired employee is getting the pension, the agreement or the relationship is that of an employer and an employee. When a widow or a widower is getting the pension, there is no direct employer-employee relationship. Henceforth, in the hands of the widow, that particular pension will be income from other sources. Salary deemed to be accrued in India. Any service, or if you are providing the services or you are rendering the services in India, then that particular salary will be deemed to be accrued in India. What is the exemption? Let us see the case of a staff of an embassy, Indian embassy, who is working outside India like Sri Lanka or US, representing our country. So even though his place of service is outside India, even though he is rendering services in Sri Lanka or in US, since he is part of an Indian embassy, his salary will be deemed to be accrued in India. Next, very important aspect for your CMA Inter is children education allowance. This aspect or this area has been tested for n number of years so far. So yes, children education allowance. What is the exemption available for children education allowance? It is 100 rupees per month for 2 children. Okay, it is 100 rupees per month for 2 children. If the employee is having 3 children, he will be eligible for an exemption under the health children education allowance only for 2 children. Okay. Now, if he is having only one child, then what will happen? It will be available only for one child. So you will be putting 100 into 1 into 12 for the whole year. You will not do 100 into 2 into 12. Okay. In the same way, if suppose the employee is having 3 children, how will you calculate your exemption under this head? It will be 100 into 12 into 2 again and not 3. The third child, it will not be eligible for getting any exemption. Now, in your examination, if it is not a 1 mark question, they have given you a proper detailed sum to work on it. Then you always keep in mind that the option that you choose should be something which is favorable to the employee. Got it? If suppose he is spending 100 rupees for one child, 200 for another child, and 300 is the expenditure for the third child, then the taxable portion that you will be considering in your solution would be that of the first child, where only 100 to be has to be taxed. So always keep in mind when you do a sum on this head, you should think that there should be some tax planning involved and there should be something that is more favorable to the SSC. Your answer should be within the provisions, you are giving an answer which is favorable to the SSC. So that is how you have to work out the solution. Now, again, children education allowance is what we have dealt with so far. It is the exemption provision of the allowance that we have seen. Now, if it is coming in the form of children education expenditure or reimbursement of children education fees, etc., it will become a perquisite. It is not an allowance. So please do keep in mind that the allowance exemption is what is given as 100 per month for 2 children, and this is not for the perquisite. So read the question and understand whether it is an allowance or a perquisite that is given there. Next is the hostel allowance for your children. Again, this is for your children and not for your brother or sister. So in the question, if they are telling about your brother or sister, that hostel allowances will not be exempt there. Now, what is the amount of exemption available? It is again 300 per month for 2 children. If he is having 3 children, what you will do? You will do 300 into 2 into 12 and not 300 into 3 into 12 because the maximum is available only for 2 children. Again, if they are telling he is having only one child, then what you will do? You will have to do 300 into 1 into 12 and not 2 because only one child is there. Now, allowances, several allowances are taxable and there are various provisions applicable for exemption and taxability of each allowance. What about the allowances which are received by the government employee working in Indian embassies or Supreme Court judge or UNO? For those cases, the allowances are completely exempt. You see in your question that an employee is working in UNO or embassies and his allowances are given. You will give complete exemption to those allowances. Conveyance and travel allowance, this is another tricky thing. If the conveyance allowance is given for your commutation from office to home or home to office, then those allowance are fully taxable. If it is meant for official purpose, going to client place or to perform the official duties, then yes, they are exempt on the basis of the actual expenditure incurred. This differentiation, please do keep in mind, allowance, the conveyance allowance which you are incurring or which is provided to the employee to travel from home to office is fully taxable irrespective of the amount of expenditure incurred by the employee. Only other than that, which are incurred for official purposes, they are exempt subject to the actual amount incurred. Entertainment allowances are exempt only for government employees. Please see in the question whether the employee is working in a private sector or public sector, or if he's a government employee. Identify that. Government employees, yes, entertainment allowance are exempt. And what is the maximum exemption available? It is 5,000 rupees. Okay. Here, whatever is the allowance is received will be exempt. There is no condition or requirement to compare the allowance with the actual expenditure. That is, if the government employee is receiving the allowance, even if he is not expending it, he is eligible to claim the exemptions. Or, yeah. Then maximum standard deduction. Yes, maximum standard deduction is again 50,000. However, if your income from salary totals to only 40,000, you will restrict its standard deduction to 40,000 only. You cannot put 50,000 there and show it as a loss under the head income from salary. No, that is not possible. Maximum standard deduction is 50,000 rupees. Now comes professional tax. Professional tax on actual payment basis, you are eligible to avail a deduction. So whatever professional tax you are actually paying, that is deductible. So how will you treat the professional tax? Let's assume the professional tax paid is 1,200 for the year. You will add this 1,200 in your income from salary, arrive at your gross salary, and then reduce the deduction available under section 16 subsection 3 is professional tax on the actual basis incurred. Recognized provident fund. There are different types of provident fund. The most common and tested one is the recognized provident fund. This will be tested in your examinations. So what is the condition there? Employer is contributing something into your recognized provident fund, that is into the recognized provident fund of the employee. It is exempt. It is not taxable, provided that contribution is within the limit of 12% salary. If you see in your examination that an employer is contributing 14% of salary to the recognized provident fund, that 2% is to be treated as the part of salary income of the employee. Please keep in mind this 12% limit. Similarly, interest that is accruing in the recognized provident fund is also exempt, subject to the upper cap of 9.5%. If you are seeing in your examination that it is 16% interest is provided on that recognized provident fund, 16 minus 9.5%, that the difference of interest you will show as income taxable in the hands of the employee under the head salary. Now, club membership fees, if it is meant for official purposes, it is fully exempt. Again, if it is meant for non-official purpose, he is enjoying some benefits on that purpose, that portion alone you will have to reduce and treat it as a taxable thing. Gift, if the employer is giving in the form of cash, it is fully taxable. If it is a non-cash form, that gift is exempt subject to a limit of 5,000 rupees. Up to 5,000 rupees is the exemption available. Tour and accommodation. The employee may have to travel to several places for their business or official purpose, for attending several trainings, etc. So these things are not to be taxed in the hands of the employee. Now let us assume a scenario where A goes to Delhi for his official purpose. He finishes the job in 2 days and he extends his stay for another 3 days because he wants to go for enjoy it as a vacation, applying a leave. So that 3 days, whatever is the tour or accommodation incurred by the employee, that will be taxed in the hands of the employee as his taxable income from salary. So the tour and accommodation which is reimbursed or which is expended by the employer for the employee for official purpose alone is exempt from tax. Tea and coffee expenses, tea, coffee, snacks, whatever is given during your working hours to the employee is not to be taxed. But if food is given during working hours, that has to be treated as a perk visit. Now, how will you calculate what is the value of the perk visit? It is the cost incurred by the employer. Whatever is the actual cost of the employer for that particular meal which the employee has consumed will be treated as a perk visit in the hands of the employee. What about paid food coupons? Paid food coupons which the employee cannot transfer and which is used by the employee to have or consume the food which is provided in the office premises or cafeteria of the employer. then that is taxable subject to some small exemption. What is that exemption? The taxable portion is nothing but the cost incurred by the employer for providing that particular meal. So that meal cost minus 50 rupees per meal. So 50 rupee deduction is what they are offering here in this section. Whatever is excess of this 50 rupees, it will be taxed in the hands of the employee. So let us assume that there is a scenario where one employee is eligible to use food coupons for one meal every day in the employer cafeteria facility. So the cost of the meal, let it be 100 rupees. So how will you calculate what is the taxable portion of this food coupon? It will be 100 minus 50 rupees per meal. And let's assume he has attended the office for 30 days in that month. So 100 minus 50 into 30 will be the taxable perquisite for food coupons. Insurance premium paid by employer for a policy on the life of the employee is taxable. However, if such a policy is in nature of your ESI or group insurance scheme or approved superannuation, etc., then that is exempt from tax. You need to include those cases as income from salary. So these are the significant MCQ questions which you can expect under the chapter income from salary for your examination. Please stay tuned for our next session, which will be where we'll be discussing the detailed provisions of those sections which will come as a sum or a 7-mark or 10-mark questions for your examinations. Thank you.